Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. If you are a dividend growth investor looking for deals in this crazy market, go ahead and hit that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. Stocks like Pfizer that we are going to cover in the stock pick of the day series. That's what I do here Monday through Thursday. I look at stocks that have pulled back on the day and try to find value. So help me get to 1,000 subscribers. It doesn't cost you a thing. It really helps out a small YouTube channel like myself. Hit that subscribe button. Hit the thumbs up and if you find any value in this content. And let's jump right in. August 24th. It is Thursday. Last video for the week. Don't forget Sunday mornings I put out my portfolio update, so tune back in for that. We are going to cover Pfizer out of the healthcare sector today. Let's jump right in. So if you want to know more about this company, check them out, www.pfizer.com. That's www.pfizer.com. This is out of the healthcare sector, and I know we've covered them before, but there are some things I really want to highlight, and I really see a lot of value in this company. I don't think they're getting enough attention. Started back in 1849 by cousins Charles Pfizer and Charles Earhart, founded Charles Pfizer and Company in a red brick building in Brooklyn, New York. Fast forward to 1950, terramycin. I'm not even going to try to pronounce that. Someone down below can school me how to pronounce that, how to break that up. A broad spectrum antibiotic that is the result of the company's first discovery program becomes the first pharmaceutical sold in the United States under the Pfizer label. Pfizer begins expansion into overseas markets and the international division is created. Fast forward again to 1980. Fiden Prioxicam becomes one of the largest selling prescription anti-inflammatory medications in the world and ultimately Pfizer's first product to reach a total of $1 billion in sales in the United States. And fast forward again, most recently 2022, this is what I don't think is getting talked about enough. Pfizer acquires several companies, right? So they've gone out and bought up a lot of smaller pharmaceutical companies so they won't have to compete with these companies, and they take on any of the medications that these companies were selling or had in their research and development pipeline. So Arena Pharmaceuticals, a clinical stage company developing innovative potential therapies for treatment of several immunoinflammatory diseases. Reviral, a clinical stage biopharmaceutical company focused on discovering, developing, and commercializing novel antiviral therapeutics that target respiratory syncytial virus, RSV. Biohaven Pharmaceutical Holding Company, the maker of an innovative migraine therapy approved for both acute treatment and prevention of episodic migraine in adults. And this one hits home to me. My wife does suffer from migraines, and they are debilitating. When she has migraines, she basically has to go sit in a pretty quiet dark room to be able to manage. So this one, and she does take some things for her migraines. This is one that really hits home to me. Even my oldest daughter has issues sometimes with migraines. Global Blood Therapeutics Inc., a biopharmaceutical company dedicated to the discovery, development, and delivery of life-changing treatments for underserved patient communities, including sickle cell disease. Had several of the people that I was in the military with had sickle cell. One guy ended up being discharged. His was so bad. So this is a pretty one that I'm familiar with as well. But again, they are actively acquiring other companies and expanding their portfolio of pipeline and future drugs, as well as, again, any drugs that these companies may have already had on the market. And the reason we are taking a look at them, down 1.39% on the day, closed out the day at $36.15. We are talking about Pfizer Inc., ticker PFE, out of the healthcare sector. 52-week range as low as $34.66. So they are right up against their 52-week low here, as high as $54.93. Volume average was 24.9 billion. Today's was 15.4. Big sell-off. Looks like it might have tried to rebound there in the end of the day there, 3-4 o'clock, and then right down again it went. So overall, just a drop throughout the day. Market cap of 204.101 billion. So this is a large cap company. Beta of 0.55. They are less volatile than the overall market. Price to earnings PE ratio very low on this one for a biopharmaceutical company too, 9.61, $9.61 per share. Earnings per share EPS sitting at $3.76 per share. Nice earnings per share. Next earnings date is sometime between October 30th and November 3rd. For dividend, $1.64. They are a quarterly payer. We'll see that here in a little bit. And a very nice dividend yield on this one, 4.47%. Ex-dividend date was July 27th. They are going to pay out on September 5th. And full disclosure, I am long Pfizer, so I am going to be one of the recipients of this payout on September 5th. And a one-year target estimate, at least according to Yahoo Finance, $44.34 per share. I am not affiliated with Yahoo Finance, just one of the companies that I like to look at for information. And I like to look under statistics, go down to dividends and splits. We're going to look at dividend yield theory to see if this one is presenting any value right now. And to do that, we look at the 5-year dividend yield average, 3.65%. We compare it to the current 4.47, or over here, forward annual dividend yield, and it is much higher at 4.47%. So that speaks to some undervaluation on this one. They are inversely correlated. If the current is higher than the 5-year average, it's potentially undervalued. If this was to be lower than the 5-year average, it would be potentially overvalued. And that is how dividend theory works. Payout ratio, 43.09%, low payout ratio, a lot of room to continue to increase this dividend, do exactly what we saw on the previous slide, make acquisitions. They can use that free cash flow to do that, make acquisitions. They can use that free cash flow to buy back shares, to pay down debt. In this case, they have a lot of free cash flow to do all of those things. Now we want to look at under financials. You're going to find some great information, balance sheet, income statement, revenue, assets over liabilities, a lot of good information, their margins, all can be found there. We want to look at free cash flow. We want growing free cash flow over time, because out of their free cash flow, they pay dividends, they make acquisitions, they pay down debt, they reinvest into the company, research and development. That's where free cash flow would get spent. And 2019, $9.9 billion. 2020, big jump up to 11.6. Even bigger jump in 2021 to $29.8 billion. And then a bit of a drop from 2021 to 2022. This was to be expected. I would actually expect a drop even into 2023. They are talking about having some more COVID boosters, so maybe that brings them back up. But the 2021 big jump up would be a lot of that driven by the COVID vaccines. So this drop is expected, and I believe they even are expected to drop further into 2023. But overall, from 2019 on, growing free cash flow. They do buy back shares here. You see a big tranche they bought back in 2019, nothing in 2020, nothing in 2021. But even the year that they were doing the acquisitions that we saw, they bought back 2 billion shares here as well. So they are buying back shares at times, doing acquisitions, continuing to grow that business, and that is good to see. So far, pretty good numbers. Payout ratio lower than I like, 75% or less, 43%, very good. High dividend yield, potentially undervalued. Growing free cash flow. Let's keep on going. Stockanalysis.com is another site that I like to look at for information. I always recommend more than one site so you can back check the information that you are getting is accurate. And that 15 stock analysts have taken a look at this one. It is right on the edge of a buy and a hold here, but overall they have it rated as a buy. They have a low estimate of $38. It currently sits lower than their lowest estimate, so if it was to come back up, that would be a 5.07% increase in the stock price. They have an average estimate of $48. That would be a 32.73% increase in the stock price. And if it happened to hit their high of $75, that would be a 107.38% increase in the stock price. All the while, you could collect that 4.6% dividend yield. Now you're going to find the same information. It actually goes back a little bit further at stockanalysis.com than Yahoo Finance does. Under financials, balance sheet, income statement, revenue, assets over liabilities, margins, all that information you want to get in there and take a look at. I like to look under statistics, a lot of good information there too. You'll see if the earnings per share is projected to grow, whether their revenue is projected to grow, how much they are under or overvalued potentially. But what I am looking for is their return on equity, ROE, and their return on invested capital, ROIC, and I like 10% or better or in line with their industry average. And this beats both, 22.10% on the return on equity, twice as high as the 10% I look for, and return on invested capital about the same, 19.80, almost twice as high as well. Very nice numbers all the way around. I really feel that Pfizer is showing a lot of value right now. And let's look and see if the dividend is growing over time. And as I stated, full disclosure, I am long. I do have 200.399 shares of Pfizer. I am slightly down 5.25%. My cost basis is $38.21. That tells you I'm willing to pay at least up to $38.21. It currently sits lower than that. I've been adding bits and chunks every other week or every couple of weeks on this one. So I still feel that it's undervalued, and I love to continue to bring down my cost basis. Love the yield on this one right now. Now, dividend growth on it is a little lower than I would like, but they're doing some other things with their cash flow, free cash flow, right? We saw that they were making some acquisitions. They are buying back some shares. So I guess I can forego a little bit of dividend growth. They are growing 2.52%, their dividend growth. I would like it to creep up a little bit more, but so long as they're using their free cash flow to do some other things like make acquisitions, pay down debt, and buy back shares, I'm okay with a little slower dividend growth, especially with a starting yield of above 4.6%. Payout ratio, as we saw, 43.62%, very low. Going back to 2020, July of 2020, 36 cents. They jumped it up in January 28 to 39 cents, January of 2022 to 40 cents, and January here recently in 2023 up to 41 cents. So I would, again, like a little more than just a penny raise every year, but they are raising it. And so long as they're doing some of the other things that we've seen, like I said, paying down debt, buying back shares, making sure their balance sheet is good to go, then I'm okay with that. And here's where you can see the dividend is about to pay out on September 5th, 41 cents per share. So looking forward to seeing that in the portfolio here. This is the vested interest stock screener. This is how not only how I set up the videos, but also how I look at a company on a high level to see if I am interested in doing more of a deep dive and potentially adding it to my watch list or to my portfolio. You can read through this at your leisure. And that is really it. That is Pfizer. Let me know what you think about it. Out of the healthcare sector, a biopharmaceutical company. They do have an arm here in Michigan where I lived doing some manufacturing. So I love to support companies that are in my backyard as well. And Pfizer is one of them, even though it started out in New York. Let me know what you think of the biopharmaceutical company altogether. I know J&J has pulled back, Bristol Myers Squibb, several in that sector. So overall, I believe the sector has pulled back lately and may be presenting some value. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. Stocks like this one, we cannot benefit from each other's investing, but we can benefit from each other's experiences, good and bad. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company, a stock you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.